Hi, this is Keith Johnson with the Business Buzz for December 15th, 2025. Actually, I was out for a few days. I was getting my shoulder. Well, we thought it was going to be a reconstruction. I think I told you just before I went, um, had my surgery that I played golf last year in the Jacksonville Senior Games and tore tendon in there, but it was a minor miracle that the surgeon who was from JOI, who works on the Jags and many other sports teams, he's probably the best you can get. He said that there was no damage to the rotator cuff. So that cut everything down significantly. Yes, there was tendon 2 torn. He fixed that. There was some tissue that, because everything was kind of unstable, was inflamed. He fixed that. He took out that. So I was in a cast for, or not cast, but a sling for 2 days, and it was great. I got out of it and rehab. I'm started to rehab, but I'm not going to have to spend it. It's going to be weeks instead of months as far as rehab. So the good Lord, got to give credit to him. We had a lot of prayers and thoughts from people. We appreciate that very, very much. But I got to give glory to the Lord. He was there for it, and he guided the surgeons and the anesthesiologists and everybody's hands. And if you ever have to go to Baptist Beaches in Jacksonville Beach, it is the best hospital outside of maybe Mayo Clinic that I know of. We have Mayo Clinic here too, so that's why the comparison. But Beaches Baptist, to a person, treated me with a lot of professionalism, thoroughness, bedside manner, empathy, all of that. They really cut down on any nervousness I had. Everything they did was like clockwork and said that they were going to go. So because of that, I'm able to get back to streaming and getting back to my developing the Business Buzz a lot sooner than I thought. So anyway, today, it being December 15th, is kind of a we're in a calm before the storm, as it were, with taxes. The IRS shut down their e-file system. I brought that up a week or two ago. They're not going to be open until the end of January. My guess, educated guess, it'll be tax filing season will be back on January 27th. That'll be a Monday. Usually it's the last Monday of January. So with that, we are going to go over some of the tax changes that you're going to see, not only for the 24 filing season, because these are changes that were already in effect, but some of the new stuff that the IRS has come out for 2025. Now, we're not going to be implementing it until next year, early 2026. But as far as filing, it's a good idea that you get to know it now so that you can implement that in your tax planning for next year. So we'll start off with a big favorite of everybody's. It's the mileage rates, standard mileage rates. Now, basically, you get two choices for deducting automobile expenses. One is a actual expense, which is you keep the receipts for all of your gas, all of your maintenance, all of your insurance, all of that stuff. And then at the end, you give it to your accountant and they figure it up. And if you still have to base it off of the business use of the auto. You can't deduct anything for personal. What you can do is use the standard mileage expenses that are released by the IRS. We don't have 2025 yet, but based on the last couple of years, we are expecting that to be released this coming week. Usually they release it the second or third week of January or of December, excuse me. But for 2024, this will help in your year-end planning. Usually there are three types of standard mileage. The first is your overall business miles. And for 2024, it's 67.5 cents a mile. This can be used for Schedule C if you're sole proprietor. If you have auto expenses for your employees, you can deduct it for that. And it also can be used for rental properties. So if you have a rental property and you go to check it out, you get to rack up some serious miles for that. But 67.670 for 2024. My guess and prediction is it'll go up to, it'll probably go up to about 69 cents for 2025. Gas prices have been more or less stable this year. I do think with inflation, that'll add a couple cents to it, but gas prices have been stable, so I don't see that changing too much. Next is for medical and moving expenses. Now this varies, and we look at the, this is going to, moving expenses are really not used anymore. The Tax Cut and Jobs Act took them out in 2017, 2018. The only exception is if you're active duty military. If you're active duty military, yes, you are allowed to claim moving expenses that are not reimbursed by DoD. But other than that, no, you're not allowed to deduct moving expenses. Medical expenses, this includes trips to doctors, dentists, lab appointments, testing, pretty much anything. And there are a few people that do use it. This, for 2024, it looks like it is going to be 21 cents a mile, might go to 22 for 2025. The one that's very stable, and it has been this way ever since I've been practicing back in the last millennium, was the charitable expense. Charity mileage has been, for a quarter century at least, 14 cents a mile. It will stay that way for 24 and 25 because that's set by statute. It's not subject to inflationary or deflationary adjustments. Now, in the case of medical and charitable mileage, it is important to remember that those expenses are precluded by, in the case of medical expenses, 7.5% of your adjusted gross income. So in other words, before you can start deducting medical expenses, they have to exceed 7.5% of your adjusted gross income. Then you have the second test where you have to, with all of your other itemized deductions, exceed your standard deduction. We're going to get into that just a second, the changes in that. Charitable contributions, again, you have to be able to, with your other charitable expenses, SALT, state and local tax, property tax, medical expenses, mortgage interest, you still have to exceed your standard deduction for them to count. So the 67 cents is a little more usable because you usually use them to get to adjusted gross income and not use it AGI as a basis of that. So that's how that works. So we will keep you informed during the week if there are any changes. Now, as I said before, your for the medical and for the charitable expense, you have to exceed your standard deductions. So the IRS did release the 24 and 25 standard deductions. So in 24, the single deduction will be $14,600. I think it's going to be a increase of about $700 or so from 23. So it'll be 14,600. That's going to go up another 400 in 2025 to an even 15,000. For married couples filing joint, it's twice of that. So you're looking at 14,600 times 2, or 29,200 for 2024, and a flat 30,000 for 2025. And if one or more spouses are 65 and or blind, then you get the additional senior allowance of roughly about $1,500 there. So, and then married, or not married, but well, sometimes you can be married, but head of household is always right in the middle. So this year, 2024, it's going to be $600 more. So it's going to be, it's going to be 21,900, which is about 1,000 more than 2023. So it'll be 21,900. Then in 2025, it will become 22,500. So, those are your adjusted inflation figures. Of course, your marginal tax rates, the brackets themselves are still going to be the same. You're still going to have the 10%, the 12%, 22, 24, 32, 35, and 37. But, the amounts are going to be adjusted for inflation. So still, most people are going to fall in those lower three tax brackets. And those the lower two tax brackets are important because you can claim exemptions on your any capital gains that you might have. The earned income tax credit also is going up. The maximum amount will be $7,830 for 2024, and then it'll be $8,046 for 2025. Now, it's important to remember that getting that amount is all the stars have to align. It's very, very difficult to get the maximum amount. I think maybe I've done it once in my practice. So here's a hint. If you will see in January and February, especially, all these signs saying, get $8,000, get an $8,000 earned income credit right here, right now. Okay. Be very careful with it, because yes, it's technically true. So they are within the law to say it, but in reality, in order to get that amount, because I've had to clean up some, the preparer has to play little tricks on it. And I've had to clean some of them up, and it's a big wake-up call for people. So just be honest. If you're in that situation, what it is, what it is. It just depends on how many kids you have, what your income is, and you don't want to falsify anything to get that. It could be very bad news for not only you, but it can be bad news for the tax preparer. Also, Medicare savings, medical savings account, rather, that increased a little bit. The deduction, the maximum you can have is the maximum annual deduction for our deductible for 2025 is $5,700. It was $5,550 for 2024. Foreign income exclusion, which means if you're outside the U.S. for pretty much the entire year. I've had a few clients that are in that boat. one sadly passed this year, and that return is really, when that comes in, that's going to be very, very difficult for me to do emotionally. He was a longtime client, and we were, he planned his year around me, and I was like, oh. But he claimed the foreign income exclusion. So for 24, that amount is 126,500, and it goes up to 130 for 2025. Estate tax credits. Somebody was saying the other day, like there's a 40%, credit. Yeah, there is, but the thing is, unless you are somebody like an athlete or, a hedge fund manager or something like that, you're not going to have to worry about paying a 40% tax. It's, for 2024, it's you get the first $13,610,000 is exempted from estate tax. And in 25, that goes up to 14 million. So we have that. A lot of things are changing in 2025, or not unchanging, excuse me. Personal exemptions are still zero. Itemized deduction limit, there's no limit for that. Lifetime learning credit, which is very valuable if you have a child that goes to college or you go to college, that is not changing. However, the big thing to mention is that 2025 originally was the last year that the tax cut and job credit was going to be around. So what was going to happen is everything was going to sunset at the end of 2025. The theory when it was passed in 2017 was that President-elect Trump would be out of office in 2025, but that's not the case. He will be back in office and with a Republican Congress. My gut feeling is, politics aside, is that the Tax Cut and Jobs Act will be extended through 2029. They'll just re-extend it to until after President Trump leaves office. So that's my understanding. It's understanding. I don't know, but that's my educated guess. So, there's a lot to digest. And again, when the business mileage rates are released, probably sometime this week, we will get them to you. So just wanted to kind of give you an update, kind of get back into the swing of things with my shoulder. It, still aches a little bit, but the pain and the damage and motion is so much better than it could have been. And I went to the Jag-Jet game today and had no issues. So, as I said, I give credit to God, and also I give credit to everybody wishing me, sending the prayers and everything. Power of prayer is, very, very real. So, with that, I'm going to cut it for today. We'll be back tomorrow with the news, and we'll be back into probably a 4 to 5 day a week cycle of everything. So take care, and I will see you soon. This is Keith Johnson for the Business Buzz, signing off.